Tuesday, January 3rd, 2017, Monaco 64, home of alternative economics and contrarian views. So today is the first trading day, basically, of the year in the US and in the UK and many other countries. There was some trading yesterday in Europe, but I think we can ignore it. So this morning, I woke up fairly early. Gold was trading around 11.58, so it's up about $7, $6-7. So it's doing fairly well. The currencies were a little weaker, and now though it's 9:15 London time or 4:15 a.m. Eastern Standard Time, and the markets have moved a little bit. So as we stand right now, gold is at 1151.70, basically unchanged on the close, the last close of the year. The Dow is up 110, so doing fairly well. 19,895, up 0.5%. S&P is up 12.5 points, up 0.5% as well at 2,253. Silver is doing fairly well. It's $16.01, up about 10 cents. It has been as high as $16.15 earlier today. Let's see the currencies now. They're weak. The pound is 122.63. That's down 85 pips or 0.7%. Dollars up 100 pips against the yen, or up 8.86%, and the euro is down 95 pips or almost 0.9%. So we've continued, this trend of a strong dollar going into this new year. Not that I put much importance in calendar years, but that a lot of people do and market participants do. So the dollar index is at 103.16, so up 0.86 or 0.85%. And one thing I noticed, and I'll bring up some charts, is you can see here the euro chart that around 7 a.m. London or 8 a.m. continental European time, when the market participants and banks start coming into the market, the dollar started going up, or the euro started going down. You can see there the euro was up a little bit from yesterday, because it did trade. It was around 104.80, and now we've dropped, and the euro is at 104.25. The low's been 104.19, so near the low. So it looks like when London and Europe came in, the dollar started moving up and the currency is moving down. So here's the euro. This is an hourly chart, short-term chart. The same thing happened to the pound. You can see here we're trading above 123 just before 7 a.m. London, and now we're we've dropped quite a bit and we're around 122.50 right now. Exactly, we are 122.57, and gold is done a similar move, even though gold, compared to where we were on the last trade of the year, we're actually pretty much unchanged, but we are up nicely around 11.58, as you can see, and it's just followed the other currencies down as the dollar strengthened. You can see the same kind of move after 7 a.m. London. So right now we're at 11.51, basically down about $1. Bitcoin, of course, broke through $1,000 in the new year, and right now we're at 1,018. So Bitcoin continuing to do well. What else we're seeing here? No, that's about it. Let's see the bond market, see what they're doing. Treasury yields. The 10-year yield is up about 4 basis points, actually. It's at 248. We ended the year around 244. So again, 2.5 is a key level. I think the high late last year was around 263 as well. There are some people, some technical analysts that look at open interest in the Treasury futures, and they're saying that the commercials or the big banks have a big long position in Treasuries. So some are saying that might have put a short-term bottom in Treasury prices or short-term top in yields, and that we could see a rally in the bond market. That doesn't take away the fact that, we could still be in a longer term bear market, because the market says, never go up and down in a straight line. So we need to keep an eye on treasuries here. If we're able to remain below 2.63% in yield, I think maybe treasuries could rally in prices. We'll have to see. So what else? So as I leave here, markets, the main thing is that the dollar is fairly strong this morning. Stock markets are strong. The FTSE is up 80 points at 7190, so almost near the all-time high, around 7230. The German DAX, that was up yesterday because it traded, so it's only up 20 right now, but it's at 11,600. And the other thing I like to talk about, more to do with economics and the UK economy, is that usually here, the train companies, for my region is Southeastern, they usually increase their prices in the beginning of the year, and they've increased the prices like an average of 2.3%. Southeastern only 1.8%. But it's getting more and more expensive for the average person to commute into London to work in London. They live in the outskirts and they have to commute by train to go to work. And compared to continental Europe, the prices here are much, higher. And about 20 years ago or so, or a little longer, I think the conservative government in the mid 90s or early 90s, they privatized the railroads, because back in the 50s, the UK government, they nationalized the railroads, 50 or 60s, I'm not sure when. And it's been a mess, and I think the problem is they privatized it the wrong way. And because, the Southeastern and other companies that run the lines, they still have like a monopoly, and they get government subsidies. So they keep raising prices, and the services keep getting worse. And there's a lot of people that come on the news, supposedly specialists or economists, and they say, oh, we need to nationalize the railroads again. But I don't think that is the solution, personally. I don't think it will get any better. And one thing people don't look at is that in the past, when the railroads were built in the 19th century, Industrial Revolution, the railroad companies it wasn't something done by the UK government. It was private capital. So, I don't think the solution to, the affordability of railroads or the service, I don't think the answer to it is to nationalize it and make it a government company. I think that will make it worse. I just think they did the wrong, they went about it the wrong way when they privatized the railroads in this country. But people just think, oh, it's private now, so it needs to be nationalized to make it better. But I don't think that's the solution. I think the solution is to have as little government involvement in the economy. Let the market, decide. Let the market be the arbiter, of prices and services. Let the consumer and the market interact. And when you say that to people who say, oh, but we've got a market system now, it's all private, and they're greedy, they're raising the prices. Well, it's not a true free market. They've got like franchises that, will last for a long time. They've got subsidy by the government still. So that's what I wanted to talk about. Nowadays it seems that most people, a lot of people, and especially on the left, they think that the solution to everything is nationalizing things, but they forget that, you know, our banking system has been is not totally private by any stretch of the imagination. You know, in the US, in the UK, in Europe, our banking system has been subsidized by the taxpayer. And they think it's a private and free market, but it's not. You know, I personally think the real big problem is the monopoly of the money through central banks. Once we get rid of that and we have free market money, I think it will be better for everyone, not just capital, but also labor. Government's function is just to, you know, administer the rule of law, property, property rights, the individual's rights, against theft or, assault and things like that. That's what all government is there to do. We don't need more government. The problem is we've got too much government. Look at all the national debt we've got. That's government debt. Do we really need more government? I don't think so. So I leave you here now with this market update and a little bit of, economics based, on the UK situation. And if you enjoyed this video, please give me a thumbs up. Also, if you haven't subscribed to my channel yet, please do. And if you really enjoyed this video, share it with other people far and wide. And that, by the way, is Billy there, the Shih Tzu. Sometimes he sits there and listens to me. Sometimes he just sleeps. He doesn't really care too much about economics as long as he gets his breakfast. So I'll talk to you later. Take care. Bye.